outside another Exxon today for this relatively quiet news day on the market. But despite it being relatively quiet, I'm still making some pretty significant moves, and I think that there are some trends that are developing and some things that may be about to occur that I want to steer you away from to an extent. I don't advise you to go all in on this or anything, just to make you aware of it, to not be caught too much off guard. And we're seeing these moves made by Mr. Big Short. I don't know if you saw the movie, heard the name. Mr. Big Short is making two moves. He's going short U.S. Treasuries. He's going short Tesla. And if you look at the Tesla chart today, and I'm not a big chart guy, not a big technicals guy, but it does look like that's about to break lower. So I did add some Tesla puts. Think that could print. We'll see what happens. In addition, shorting U.S. Treasuries. And I don't think this is an unusual trade. We are seeing inflation data come out, and I apologize if there's rain noise, but we are seeing inflation data come out. It's definitely happening. Mr. Inflation is definitely peeking his head out the roof. And we haven't really seen a bond yield move in the past week or two, past couple weeks. But it looks like that could be having a move, just like I and many others expect oil to have a move. And who knows? It might be a little too early to say if the inflation is structural, meaning if it's going to last longer term, and not just be transitory. But it's almost very hard to believe that it's going to be just transitory. I personally am struggling to see that, despite what the Fed is saying and despite what many people and banks actually seem to believe. We really got to see what happens with this. I see upward wage pressure. I see lots of money printing. And I see those as the two necessary forces behind structural inflation. I think if you have those two things, the inflation is going to last. I don't see wages rising and then falling. I see wages rising and then pushes for $15 minimum wages occurring. In addition to future stimulus, we're seeing California pushing, another $1,100 check. Not saying that is game changing, but that's something in addition to possible future infrastructure. So it seems to me like there are some inflationary forces, and this is going to lead to a rise in bond yields, possibly. And a rise in bond yields is going to lead to, most importantly, tech cooling off yet again. And this will impact Tesla. And I'm going short Tesla, but I'm not going short my beloved tech names. I'm not going short things like CRISPR stocks. I will hold those through the weather that looks like this. If you believe in a tech story and you think it is well priced at this current level, I encourage you to weather the storm through it. It hasn't been a good idea in the long term to sell those and try to time the bottom. If you happen to do that, good for you. You'll get good returns with that. I have done that on more macro events, things like the coronavirus downturn. And, maybe a rise in interest rates is a macro event like that. But you get one good announcement out of a CRISPR company and the stock will be up 20 to 50% or something like that. And those are well priced in my opinion. Now, Tesla, it's not a controversial opinion to say Tesla is overvalued or very expensive right now. So a rise in interest rates will definitely impact a company like Tesla. So we'll really have to see what happens in this regard. But these are just things I want you to have on your mind and be thinking about. It looks like bond yields could tick up here. We really have to see what happens. They didn't tick up on the long-dated bonds in the last batch of inflation data. Only in the shorter duration, more like 2 year. That almost shows you that the experts are saying it's transitory. And, it's possible that it is transitory. I am just questioning that belief. Given the price increases we are seeing, it wasn't too long ago where Amazon was paying $15 an hour, or wage increase, $15 an hour with their, starting pay. Now we're up to $17. Now we're seeing restaurants not being able to handle the situation and having to hire with signing bonuses. I expect this trend to broaden out and to cause some ripples in the market. So we will see what happens. And until next time, peace out.